What is up, everybody? We are back with another episode of Bullish Top Stocks to Watch for the week and why. Before we get into it, as always, hey, these are only my opinions. Do your own due diligence. I am not a financial planner or advisor. These are things I'm watching, maybe playing. Also, realbullish.com. Go subscribe for our newsletter. And the next, if you haven't hit 50 yet, but the first 50 subscribers going to be pulling a random name and sending a shirt. I don't actually have the shirt on right now. All the ones I have are in the wash or a set to wash. They're not washing yet. But yeah, so super sad I don't have it right now. But badass shirt. I get compliments. Maybe I'm giving myself compliments, but still. Also, hey, go get some merch. I'll drop the link here, but it's also on realbullish.com. Go get some merch. Help support. I really appreciate that. Also, real_bullish wherever you get your social media poison. Pretty active on Twitter, stock twits, Instagram, and stuff like that. But anyways, let's jump into it. I have a few to run out, and I'm gonna try to do it quick. The first one I'm looking at is AutoNation. Hopefully you can see it on my screen. But AutoNation, the reason that I'm watching it this week is they have earnings on 10/21 before the market opens. I hate before market opens earnings because I don't know. It just like you have to wake up early and the market, doesn't really move yet. So before market earnings are harder to play than aftermarket, in my opinion, because aftermarket close, you kind of get that pop that you can gauge after hours, which is cool to set up, then play maybe like that night into the early morning or into the morning, but before market opens, really don't have that opportunity. But anyways, I think it's a nice chip shortage play. There's a shortage of basically everything, but semiconductors specifically, and I think that's an interesting way you can play the chip shortage. But also, there's the opposite of that. Once chips start kind of coming more chip processors start coming online, you could see the opposite of that. Black Bear Value Partners, just CIO, actually explained it that the reduced semiconductor supply has limited auto production, driving up the prices for both new and used cars. This has given AN, which Black Bear owns, a profitability boost that will disappear when an adequate number of chips become available. So basically, he's saying, yeah, the chip shortage is playing in the favor of AutoNation right now, but once production probably in 2020, the late 2020, start kind of ramping back up to meet demands, you might see you will see some headwinds in terms of AutoNation pricing. But anyways, the reason I'm watching AutoNation specifically this upcoming week, it has an interesting earnings play. The price right now is 21% under the average analyst price target. So for me, it's under fair market value. It's kind of borderline for me. I really want the price to be kind of in that 10% under or less sweet spot, right? Once you start getting above 20%, I think that's kind of an underlying of the stock of something else, maybe a sell off or kind of like really high headwinds or something like that. But that's something to keep in mind. It's a little bit. I would want that. I want it to be closer to that analyst price estimate. But 20%, 21% is not too bad, right? I keep on mentioning apps, but that was 60% under the average analyst price target, and it did take a long time for it to come back up to that. All right, but the thing that I'm looking at for this one specifically for AutoNation, it's estimated to be 155% increase to their year over year EPS. So that's going to be really interesting. Once you hit those 100 numbers, right? That those 3-digit numbers of increase this time last year EPS. That's a great sign. Over the last 12 quarters, they beat 83% of the times. They meet or exceeded the EPS or earnings expectation 83% of the time. And of the last 6 quarters, they've raised 83% of the time the next day after earnings. Both of those are really good to me. I like to put numbers in my back to help me feel better about that. Honestly, for me, they're 10% off their all-time highs, and that's kind of what I love. And I'll show you what I mean. I love buying stocks that are making all-time highs, but on corrections to that, like on pullbacks. 10% of from the all-time highs is about that area that I want to see it start turning around, right? So I wouldn't want it to go 15%. That's not a pullback. That's a correction, right? So at that 10% mark of where it is now, I think is an interesting thing. Also, one thing about AutoNation that I saw, they have about a 10% short interest. That can be of concern because a short interest is people are betting that it's going to go down, but also that can work to your advantage if you're long this, because as let's say this beats expectations and blows it out of the water, those shorts are going to have to start covering. 10% is about at that area where you can really see a pump in the price because people are having to cover their short interest. So that's all something to take into consideration. Jump into the charts real quick. What I see, like looking just month, week, day level, how I do it. For the past, let's say 3 months, 4 months, it's had a lot of a lot of pressure or a lot of that's hardship, let's say, moving past this 120 area right here. You see this area right here, and I have an alert set to say, hey, if it goes above this, tell me. But for the past 4 months, it's been an area of heavy resistance, right? You've seen selling pressure come out through that. And even though you've had volume over average for a couple of those months, 2 of those 4 months, they still haven't been able to break that area. RSI was overbaked. You see, RSI goes to 70 or 30. Go to realbullish.com. Give me your email. I'll send you a fucking quick RSI example. I'm gonna link a video to it as well, something that you can kind of quickly refer back to when you're thinking about these things. But I love using RSI, price, and MACD. Right, those are the three I really like to use. But RSI is kind of coming down at the month level, not too steeply, but it is correcting, which I like. MACD is still kind of is correcting as well. It looks like it wants to start pinching to be bearish as well. And also, the price action, it just got ahead of itself, and it's kind of corrected this 10 EMA at the month level, which I don't mind, but also it does seem like it's in a correction area. It's kind of stair stepping up. It looks a little bit better at the week level, but here you start seeing that clear channel up, stair stepping. Prior to resistance, turning into support, and stepping up. So I really do like that. That's what I mean, making all-time highs on pullbacks, right? I'm not going to buy it at the top of the price. I want to see that it still has some legs to go, but buying at the bottom of that channel. Unfortunately, this hasn't given me a chance to get at the bottom of the channel. But at the week level, you still see RSI kind of being, going down, right? RSI was, it runs hot for this thing. It was about 81, 80, 82, let's say, maybe 81 and some change, right? And then it had to correct. So it's been in a correction mode since 510, right? But it's still making all-time highs, even though it's correcting at the RSI. MACD is bearish as well, but it's still making all-time highs, which is impressive to me, but it's still in that upward channel. I love catching things when they're about to touch this 10 EMA on the upside. We see some indecision here. You see a spinning top here, 2 weeks ago, last week, kind of more of the same here. It's using this area that's interesting to me, about 115, as an interesting area of support, for the past, let's say, 3 weeks, right? It's also been resistance as well. So hopefully if we stay over this line, I really like this one as a play. Maybe not for earnings specifically, because I want to see it closer to this, going into the day level. I want to see it closer to the bottom of this channel. This is where I want to catch it, because I know I have bottom channel support. And if it's not bottom of channel support, I know what my plan is going to be. If it breaks 5% under the channel, it's probably going to be in a correction, not get back into the channel anytime soon. I'll get out. But what I find interesting about this one at the day level, it almost has like a Adam and Eve double bottom here, or is this Adam and Eve double bottom here, right? One's steeper, one's a little bit more shallow and wider. But those double bottoms, you can play them for the break of the lip. So let's call it the 120 area for, there's a certain pattern that you can play for that one. It's not a strong one, so I'm kind of wary about that one, but I do like, and that's why I kind of noted it here, this area of 114, let's say 114.5, let's say, as an area of support. If it can hold that, I feel comfortable kind of getting in this and using this area as my level of support, knowing that I have battle of channel support as well. And then if it breaks both of those, I know either I'm wrong and I'm gonna get out, or I'm gonna average down. Hopefully you never have to do that. I don't do that for companies unless I believe them. I haven't had to do that a lot lately, which I appreciate, but I would love to catch this closer here, but I do think you have support here that's there before. You have bottom of channel support, so it might be worth taking a swing before earnings, especially considering the supply chain shortages, especially for chips that are coming out. But also, like at the day level, this RSI looks really good to me. RSI is coming up. MACD is about to round up to be bullish as well. You see price action kind of following suit, and I think we might see this thing kind of break all-time highs again. Like I said, I want to see it more above this area here. I buy on breakouts. I don't buy before breakouts, but I'm gonna try to get better at buying before, right? Because right here is almost that no man's land to me. It could go up, it could go down. I don't know. And I don't like buying what ifs. I like buying at the bottom or the breaks. This is kind of in that middle area. So for me, it's a little bit harder to kind of look into it. But I do like AutoNation, right? And I do think that they have a lot of interesting tailwinds coming up. The other one I wanted to go into this week is Nucor. And Nucor is one I think I talked about like maybe before the last earnings. Jim Cramer was really into Nucor for a while. But anyways, Nucor, they have earnings similar to AutoNation. It's going to be an interesting morning on 10/21 because they have earnings 10/21 before market opens. I will say a buyer beware though, beware in general. Goldman Sachs downgraded the stock and the industry. So not just this Nucor stock, still in general, they downgraded the majority of the outlook for the industry as well. Similar for the AutoNation though, because even though if there's a shortage and supply chains are constrained now and inflation and all that shit, as more of these steel companies come online, these companies, it's going to bite into the revenue profit of these steel companies. Because right now, the steel companies, the AutoNations, they're benefiting from people not having enough, so they can raise their prices up. But same kind of argument with AutoNation. As those productions keep on ramping up and the supply chains clear itself out, that you can argue that these companies are going to not be as profitable, not have as much revenue, right? But anyways, looking into it, and I actually really like Nucor looking into it. So right now they're 7% under the average under the analyst average analyst price target, right? And that's that nice range that I said, under about 10 or under percent, where I know that it's under the average fair value price for analysts. So says Yahoo Finance. You can argue that one, I guess. I'm just trying to pull where I can pull from, right? Not trying to pay too much for all these crazy bells and whistles. I'm just kind of trying to take free information where I can get it, but free is free, I guess. But they're 7% under the average analyst price target, which I love. And what I really like about Nucor, they have 1,300% increase estimated for their year over year for the previous year this time. So looking back in time a year to the 1 year ago quarter, this time last year, they're estimated to be 130% over, not 130%, 1,300% over. I'm getting that mixed up in my head. 1,300%, 1,300% over the previous year's EPS, right? So that's a pretty substantial EPS estimated increase over last year, right? And looking at the last 12 quarters, 83% of the time they meet or exceed expectations, what I love. The bad thing though, looking at the previous 6 quarters, and I'll kind of show this in the chart, looking over the previous 6 quarters, they only raised 50% of the time the next day. Interestingly enough, if you look at the seventh day, which I've been trying to look at more and more of, they increased 83% of the time. So take that. The next day after earnings, over the last 6 times that they reported, the next day has only been up 50% of the time. But if you look to that seventh day, they're up 83% of the time versus where they were when they reported earnings. So both of those are interesting to me to look into. I will say that Nucor is the largest steel producer in the country, but to me, when I look at their financials compared to their peers, they're kind of like in the top middling tier in terms of companies. If you look at price to earning ratio, they're not the cheapest, not the most expensive. Margin, they don't have the most margin, but it's pretty good. Dividends, they pay dividends, and some people don't in their peer group. But it's not the top, right? Their debt isn't necessarily the highest or the lowest. It's kind of in that upper middle area for steel producers in the country, in my opinion, right? But the same concerns, like I said, with AutoNation, once these supply chains kind of start, once supply gets up with demand, are they going to be able to keep that 100 and 1,300% or 1,300% increase EPS? I don't know. I don't think so. But still, that's something to think about. If they're not going to, supply chains aren't going to clear out anytime this year. That's really a next year, year after next concern, right? That you have to think about that. I love this because it's really showing, and I'll maybe step in the charts now. It's showing channel support, which I love. And you still have the infrastructure bill to play in. There's a $3.5 billion infrastructure bill that they're still trying to pass. And if that does get passed, which I'm not holding my breath for that one, but if it does, that's going to be a huge boost to the industrials, specifically Nucor being one of the biggest ones in the industry, right? So that's something to look out for. I hear that we're supposed to hear about this about figuring out the infrastructure bill sometime this month. We're in August, or sorry, October. We'll see how that works. But so far, they've been talking about it for months. Haven't seen it yet. Anyway, stepping into the month level, I like this one a little bit better than the AN channel because it does it on the month level. You do see a flattening to RSI. It's not declining anymore. It's still in that high 70 area, but this one at the month level can run 80 and still be making gains. This one's kind of middling in that area, and it's kind of like been in an interesting upward channel for the past few months for Nucor. MACD also at the month level is kind of still being bullish, but still kind of getting closer to pinching. So this does have some correction. You see this corrected from the top of the channel to the bottom. I like the idea of catching at the bottom of this channel. That's what I'm saying. Like with AN, it was kind of in the middle of two areas that I saw. Nucor is definitely at the bottom of it, and that makes an interesting play for me. Even though I don't like the company as much as I like AutoNation. I like the where it's at. Looking at the month level, it looks good. It's touching this. It's almost touching this 10 EMA, but it's trying to make a lift off of that. At the week level, it's still making all-time highs, but it is a pullback right now. There's an interesting correction from the top and the bottom of the channel. But as I noted here, and I'll step into it. Like it's finding a lot of support in this area, in this shaded area here. RSI, it was definitely in a downturn since 8-9 all the way into 9-2. So a month and a half. Right now, it's kind of rounding out to be more bullish, which I love. MACD is also looks like it wants to start rounding out to be bullish as well. Slight little curve here, still in a downward pressure, but it's still just kind of staying at the bottom of this channel, right? And me, I like to catch things as they're at the week level, as they're crossing this 10 EMA. Not so much the month level because it's hard to get that, but at the week level, I love it when it's trying to touch this 10 EMA and then start bouncing off of that, like what you would see here, right? I don't want to catch things at the top because it's so far. It's wave theory. It's going to come back down. down. And you see it does do that with the channel here. But I like this at the month level. I like it at the week level, as well. But at the day level is where I find this thing really, really interesting. You do see RSI. RSI. You see corrections on 70 area of 30 or past two areas of correction. It did exactly that. It hit 30. It had to drown out, hit the bottom of the RSI, and then since 920, right? So for the past almost month, it's trying to slowly be more bullish, and it's slowly grinding the bottom of that channel, which I enjoy. It. I love bottom of the channel plays before earnings. Those things are because it makes you it lets you have a good risk to reward ratio, and it gives you a couple areas of support. And if both of those areas break, hey, you fucking know you're wrong, right? And that's about investing. I was telling my brother yesterday, I find with my investment strategy now, as opposed to before, it's more about finding stocks, being excited, and finding reason not to invest. I don't want to risk my money. I want to weed out all the shit, and then maybe I'll have 20 companies I research. Only one of them maybe is good enough to look more into, and that's fine. It's about preserving your capital risk reward ratio, and these kind of plays give me that. Anyways, you see RSI is coming up. MACD is looking bullish as well. And what I see is an interesting area here in the shaded region where buyers are stepping in and not letting the price go under this area, which I think is interesting to me. I would love to catch it at that, but it might not give me that opportunity. But what I do love is it's a channel, right? Upward channel connecting the highs, connecting the lows, and it's grinding the bottom of that channel. And as it's going up, it's finding support here at this level. It's finding support at this next level, 99. So I like it here at 101. I want to see a little bit of a pullback. I would love to see a pullback on Monday and catch it close to this channel. But once you have channel support and you have, a vertical, or horizontal support, let's say, you do have an interesting double area of support, in my opinion, and that causes stocks to kind of bounce off of that. So I really like Nucor coming into the earnings, even though the next day they don't raise. In that 7-day window, they've been known to do that as well. Those are two new ones that I'm covering, and then I'll just kind of quickly go over the ones that I'm kind of pulling up again, and I'm just going to show the day level of these. So Alcoa is one that I talked about last week. And I think maybe a week before that, they had earnings last week. They had an EPS, of 205. They beat by 15% of what was expected. Their revenue was 3.1 billion. They beat by 6% off estimates there. And I like the breakout of 100 areas, right? I love the breakout. I love the breakouts of this area where it came out from here. But I will say, not 100 for this one. I will say though that it gained 15% the day after earnings. So for me, I'm gonna wait for it to cool back down, retest this area of breakout. Let's call it 51 area and see kind of how it does that. But like I said, hey, Alcoa was going to be a good one for earnings, and it did. It busted and just kind of stayed up there. So I don't think I'll see it again retest this area, maybe. But usually with earnings, you do see a bust, and then you see it kind of breaking down sometimes when people are like, oh, maybe it's not as good as we thought. But this one, it just kind of fucking busted and went, right? So I like Alcoa because it did meet earnings. It's an aluminum play, so still infrastructure and stuff. Basic materials have been on a tear month over month looking at groupings, and that's kind of why I like Nucor, because even though they're in the basic materials industrial sector, they haven't busted as much as the grouping in general. So that's another reason why I like Nucor, I was going to say. But anyways, aluminum play here, I think it's going to be interesting. Same kind of thing. There's a shortage, supply chain issues, inflation. It's all baking into how these companies are reacting. So I'm almost using Nucor and the ones that are doing earnings in the metals, industrials, basic materials. I'm kind of proxying the interest or kind of like the earnings action based on things that happen. And Alcoa is a perfect one. Aluminum play, great earnings, a lot of the same reasons because things are costing more. And you did see that 50% bust overnight. So I like that one. Also, PNFP, that's another one that I looked at last week. I did like this one as well. PNFP was a good one for me. It's a financial industry. What I loved about this one was the long base and then the pop. You do see, and this was earnings right here, exactly the same thing, they had a beat on earnings. They had a beat on revenue. They beat, by 20 cents for their EPS, which is huge. Their revenue was 442 million. That's a 15% increase to this time last year. They had a nice breakout. They had a really nice breakout, right, over this 100 area. I played this one. I sold already at the top because I did see, if you're looking at the day level, a hammer here, and I was gonna say, hey, great, I got my profits. There's a hammer here. I don't really like that. And the next day, it did retrace that, right? It kind of pulled back on that. Once you see these at the top, these are great at the bottom, not the top. This at the top, you see that you want to maybe get out a little bit. This one played a little bit above that area, and now it's hopefully going to retest this 100 area again. Sorry, it already busted down under 100. It's still over the breakout area, but 100 hundreds are really important areas psychologically for people. 100, 200, 300s, even half numbers like 50s and stuff like that, or half holes of that like 50 are important. But once this breaks, if this would have held 100, I would have kept it. But since it busted back down under 100, I was fine with not getting back in until this upcoming week to see what it's going to do. I hope it retraces more to this breakout area and finds support at this area of break. I would love for it to like bounce off of this area and start rolling, which I think could happen because this it really exceeded expectations. PNFP. The other one I'm going to talk about was CRM, and I've talked about this for a month already, but this is exactly what I was looking to happen. You basically had a cup and handle here. It retested and then broke out of this area, and once it broke out of this area of resistance, it's going. Right now, like I said with the previous one with PNFP, it does have a hammer on the top, which is not the best thing, but so far it's kind of holding that area, right? So it busted up pre market and then kind of been kind of waning on. So it's the same, but it's a little bit different to me. But since there's it's getting close to that 300 area, you would expect some resistance there as well. But as long as it stays over this breakout area, this of all time highs, right now it's at all time highs basically, and unless it gets back under that 285.73 area, I like it because of that cup and handle. And for the cup and handle, there's a thing you can do, but basically what you do is you look at the bottom of the cup and lay that over the breakout of that lip or the handle, and then you can get your price target. For this one, I had a hesitant price target of, let's say, 338, right? Because you're taking into consideration the bottom of that bottom of that cup, and then that breakout area, layer that price on top. Like I said, also interesting catalyst coming up for this one is going to be a Tableau conference in November. I want to say the beginning of November. So in a few weeks, they're going to have a conference that they're going to show a bunch of new shit. It's not CRM specifically, but it's Tableau, which CRM bought, let's say 4 years ago now. So I think it's going to be an interesting area for them to kind of show out a little bit, which I really enjoy, because the last time they had a conference, Dreamforce, which was for the whole Salesforce, was maybe a month and a half ago. That was that pop that you saw that was like, oh shit, like people want to get into this, right? Because they shared a bunch of new stuff, new things. The other one I wanted to go, and this is one I put in last minute, but just a couple minutes, and it won't take too long. BOWX, and the thing about this one, if you know what the fuck WeWork is, there's a book. It's called The Cult of We. It's on back order. I've been waiting fucking 2 weeks for this book because I wanted to read it before trying to get into this. But basically, WeWork is gonna go into an SPAC merger with this company. They are going to vote on it Tuesday, so 10/19, right? So be on the lookout for that. But this is an interesting area because it's basically at $10. This is fun. I don't like SPACs. I don't like I don't like Adam Newman. I don't like his golden parachute ass. But it's a very interesting company for what he built. They've actually turned the company all the way around. They cut expenses. Look at WeWork's kind of like go to market. I think it's maybe I'll link it. But I was reading and listening to kind of their investor presentation. It's actually pretty interesting how what they've been able to do in such a short amount of time after they got Adam Newman out. They didn't go for IPO because their financials were shit. It's a whole different company. It seems that from a financial perspective, but with that same kind of cult of we attitude, right? And I think it's an interesting play, especially post-pandemic. I'm never going back to the office the same way again, and I don't necessarily want to work from home all the time. So I've been thinking about going to these co-working spaces, which I have friends that work there, and they love it. I used to work at a co-working spot. It was fucking amazing. It was really fun to do and like work around people and not have to like be with them and shit. It was pretty badass. They had like they had parking. You can get your haircut there, your tire change, go to the gym, cafeteria. It was really cool. Coffee shop in there. So these co-working spaces are going to be more interesting as COVID eases up, but people aren't going to go back to the office, right? I think we'll see more stipends for working from home, which I get, which is great. And I think we'll see more stipends to work at co-working spots as an office optional type thing. But anyways, I think this company, especially if they pass, they could also not pass the vote to go to merge with WeWork. But if they do, I think that it's going to be a bargain here at $10, especially if you're looking 5 years into the future. This is super speculative play for me, but for me, I think the risk reward ratio is a really interesting setup, even though I really don't like risky plays. Anyways, I'm going to jump out. Hopefully you got all that. AutoNation, Nucor, Alcoa, PNFP, Pinnacle Financial, whatever, Salesforce CRM, and this BOWX SPAC merger with WeWork is going to be interesting. Definitely something I'm keeping my eye on. Everyone have a great week. And for all the haters, go Astros. We had a tough loss this weekend. But hey, that's how it works sometimes. Everyone, good luck.